Why is Bitcoin still taking that top slot? That day in D.C. when you testified before Congress, it was so hot.
And you were not in the hot seat.
If you held a gun to my head, David, and asked me which ones was which, it would not be a pretty scenario. Well, ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and we have a very exciting episode of the show for you today. Joining us on the other side of the mic, a very special guest, a prominent figure who's been shaping the trajectory of digital payments and financial technology over a decade. Our guest is David Marcus, former president of PayPal and head of Messenger and Novi at Facebook, now Meta. And he's here to talk about everything that we've been covering and following at The Block. We're going to be exploring his new exciting venture. Well, not so new anymore. I mean, we've been doing this for over a year now. Lightspark, which is on a mission to explore, build, and extend the capabilities and utility of Bitcoin. But before we dive in, I want to take, as always, a moment to thank our sponsors, one of which, funny enough, is PayPal. Do more with your crypto. Whether you're a crypto expert or a newcomer to the world of digital currencies, PayPal provides a secure and convenient platform for your crypto transactions. Start exploring new Web3 applications with peace of mind, knowing that PayPal has your back. Learn more and get started today at paypal.com/crypto. Terms and conditions apply. This show is sponsored in part by CleanSpark, America's Bitcoin miner. With CleanSpark, you can feel good about investing in the Bitcoin ecosystem because CleanSpark uses low-carbon energy for their Bitcoin mining data centers and is always optimizing their operations to increase energy efficiency and reduce e-waste, all while partnering with the communities they operate in. If you want to support the future of Bitcoin while also supporting the environment, visit www.cleanspark.com to learn more about the CleanSpark way. Okay, David Marcus, thanks so much for taking the time to join us. How have you been?
Good. Thanks for having me.
No worries. So maybe we can do a little background. You can walk us through your journey, how did you sort of find Bitcoin, and then maybe give the abridged history that brings us to today.
Yes. So I was actually still doing my mobile payments startup called Zong at the time in 2009, late 2009, when I first stumbled upon Bitcoin and read the white paper and tried to play with it, but it was so cumbersome, even for a geek like me. I just couldn't get it. So I kind of put it aside, brushed it aside, and then came back to it in 2012 when a good friend of mine, who's often referred to as patient zero in Silicon Valley for Bitcoin, Wences Casares, basically started telling me more about it and telling me you have to actually spend time and understand this thing. And so I did. And then I just couldn't stop thinking about it. I just couldn't stop thinking about this idea that you could actually be your own self-sovereign for digital value, and you could move it around without any intermediary in between. And one of the things that Wences did that I repeated was actually getting people wallets and sending them money, small amounts of Bitcoin at the time. At the time, it was like actually full Bitcoins, like, not a fraction of a Bitcoin, because it was really cheap. And it was the way that I really got into it. And then in 2013 at PayPal, that's after Zong got acquired by PayPal, and I was running it, and I remember that Argentina asked us to actually stop the flow of money going out of the country from PayPal accounts located in Argentina. And I remember us having to comply because we were a regulated entity and seeing the price of Bitcoin rise just the same day. And it was really clear that a lot of Argentines at the time were actually moving their funds into Bitcoin so that they would have control over their hard-earned money.
It's funny that that part of your Bitcoin story is tied to Argentina. That's something that you share with Brian Armstrong of Coinbase. I don't know if you know that, but that's sort of when he discovered it, or from where he discovered it in a sense, or where the movement of it became or resonated with him. So Lightspark sort of extending or expanding the capabilities and utility of Bitcoin Lightning. A lot of people would probably say that Lightning has not lived up to its full potential. I think you would say that's because it's missing some key tools that can make it less cumbersome to use. So how have you folks been doing that? And maybe walk us through that mission.
Sure. I mean, that actually, those words, that mission is slightly outdated. It was basically used when we were trying to actively not say what we were doing. What we're trying to do is actually to enable an open, interoperable, cheap payment protocol for the internet. And the way that I think about this is that, if you think about email and the way that different email platforms interoperate, they have SMTP. And that enables you to send an email from Gmail to Yahoo or to theblock.com or whatever it is that you want to send to. And we don't have that for money. Basically, you can't send money between Venmo and Cash App, or Cash App and Revolut, or Revolut and Wise. I mean, all of these platforms that are really good within their own borders, but that don't allow you to move money around in a seamless way. And to some extent, that's what we tried to do with Libra and Diem back in the day at Meta, is to really enable an interoperable, open, dirt cheap protocol that settles money in real time on the internet. And we just grew more and more convinced and built the conviction that Bitcoin was the actual only blockchain that could support an open payment protocol for money on the internet, or an open payment protocol on the internet. And so we looked at Lightning, and we actually, interestingly enough, looked at Lightning in the early days of 2018 when we started the Libra journey as a potential way of doing that, but it was premature and not ready for prime time. And then we took another look in 2022, last year, when we started Lightspark, and we figured out that actually the protocol was sound, and that it just needed to be more usable, and we needed to abstract all of the complexity from what is a channel-based payment system, which is very unintuitive for people. The idea that you need to lock up liquidity in a channel with another peer, another node on the network, to receive payments, and every time a payment transits through that channel, you basically have an unbalanced channel. You need to rebalance from other liquidity from other channels and do that at scale. That's like very unintuitive. So we decided that we needed to build a platform that enabled an enterprise type of company to use Lightning in a seamless way, and just as they would use any other high-performance payment network or blockchain. And that's what we did with the first version of Lightspark, that basically has three components: Lightspark Connect, which is the enterprise-grade node management software; Lightspark Predict, which is kind of interesting because it ties a lot of the AI predictive capabilities of trying to have a map of the entire network and where the liquidity is, and trying to predict ahead of time whether a transaction would actually succeed with a given route, and if not, split the transaction in smaller bits and reassemble it on the other side and deploy liquidity dynamically on the network in such a way that when you send up or receive a payment on the network using Lightspark, it always works. So that's basically what we've built, and then a series of SDKs so that people can build Lightning experiences inside of their apps, and a wallet SDK that enables non-custodial wallets to actually build a really great Lightning experience with offline receive. So all of these things are the first version of the product that we deployed about 6 weeks ago.
And who are some of the early users of the product, and how are they sort of integrating it into their existing business?
Yeah, so it's basically all of the exchanges out there that either didn't have a Lightning implementation for all of the reasons that we just discussed around the complexity of not only integrating Lightning, but also managing your node, and also wallet operators. And we also inherit a bunch of exchanges and wallet operators that had Lightning, but were frustrated with the amount of work that was required to rebalance channels daily, the low success rate of larger transactions. And so since we actually addressed all of these problems, we're kind of getting a lot of exchanges and wallets that had implemented Lightning either on their own or with competing products.
And how much time does this save them? I mean, we talked about it when you rolled out the SDK a month or so ago. This is, I mean, the process is insanely cumbersome. I mean, you're basically trying to balance liquidity, and it's an iterative thing where you try, you maybe fail, you have to try again. How much time are we saving?
I mean, it's more like, this is, for the most part, a full-time job if you manage your own node. And we do that automatically, but not only do we do that automatically in terms of saving operational cycles, we also make sure that we make really good use of the liquidity that's on the network, so that it doesn't sit idle, that it basically has high velocity, because you want that liquidity that's actually locked up on the network to facilitate as many transactions as possible. And so you never want it to be dormant. One of my co-founders here, Christian Catalini, describes it a little bit like a transportation thing with Uber, with drivers basically sitting idle, and you have to get them in the right place at the right time where passengers are going to be, so they can actually transport those passengers from point A to point B. It's a little bit like that for channels on the Lightning network. But the reality is no one should ever learn about this, right? It's like, right now, if you want to spin up a website, it's not like you're thinking about BGP routing tables on your router. And so the same applies to a solid payment network built on top of Lightning. You want to abstract all of that complexity away from platforms that are going to build really great real-time payments experiences in their apps.
So when we spoke most recently, you kept bringing up the regulatory angle for why Lightning and Bitcoin are going to be maybe the only viable route to a sort of future of money that is as quick, as inoperable as the internet. And most options can't really match that because of the regulatory question, which has really unfolded in earnest these past few days or few weeks. So in a sense, you were right. Just a little bit, I guess. What about
sometimes?
Sometimes we all have our moments, like they say, a broken clock's right at least twice a day. What do you think about, if you were to sort of look at the other options, different blockchains, but also stable coins? Why is Bitcoin still, in your view, taking that top slot?
Well, there's several reasons for that. And I just want to state that I feel like it's a shame that we're in this current state of uncertainty from a regulatory standpoint as a country. I think that's a separate topic. But I think, the reason Bitcoin is so special is because, first of all, it is the only asset out there that has been clearly defined as not a security by the SEC in the U.S. And I think the reason for that, and that's not the only attribute that it has, but the reason for that is actually that it is maximally decentralized when you compare it to everything else. There's no known leader of Bitcoin. I mean, Satoshi Nakamoto, no one know who he, she, they are. There's maximal decentralization through proof of work, which is more decentralized than proof of stake. The history of the asset and the its blockchain is unique. So you can't recreate what Bitcoin is in terms of the history and the decade-long process to get it to where it is today. And that's why you see that, regulated financial institutions like Fidelity are doing, Bitcoin-denominated 409As, that you see Bank of New York Mellon, which is the bank of banks, trying to do more Bitcoin custody services. You see really large mainstream regulated entities adopting Bitcoin and nothing else because of that clarity and the fact that you have maximal decentralization.
Mm-hmm. So it's It's a mix of maximum decentralization and regulatory clarity.
That's right. And I think that when it comes to money, Bitcoin really is the thing. And it's a combination of Bitcoin being a great digital store of value, and then Lightning being a really, really great payment network on top of it. I think for everything else, you need other things, right? You need other types of decentralized applications that don't have to do about money, but have to do about all kinds of other things. And for that, we need regulatory clarity. Otherwise, we'll just, as a country, not make as much progress as we should on something that is going to be critical for the world, frankly.
So going back to your experience at PayPal, you obviously have a very astute, keen understanding of what merchants want in sort of their payment solutions, whether that be software or hardware. When you're engaging with maybe some large merchants in your current capacity, how far are they in this adoption cycle? And when you juxtapose maybe leveraging Lightning and Bitcoin payment solutions with their existing alternatives, whether that be, different sort of POS systems or different modes of payment, whether it be cash or credit card, where are they in the adoption cycle, and how do they see that cost or benefit analysis play out?
Well, my view is basically that when you are trying to build a new payment system or a new payment modality, you actually have to go after use cases that are hard or impossible to perform on the existing stack. Back in my time with Zong, it was mobile payments on social gaming, where the friction involved with you typing the 16 digits of your credit card, expiration date, etc., when you were buying a virtual cow on a virtual farm wasn't actually conducive to high conversion rates. In this case, it's really global payments. So moving money across borders is really complicated and costly. It also requires you to be on either the same stack on both sides, or use cash out points that are fraught with all kinds of issues when you need to pay out to a large number of people. So that's one use case. The other use case that we're intrigued by are actually micropayments and microtransactions that have been overhyped for over a decade, and has never happened because the actual cost of moving very small amounts of money on the internet today actually exceeds the amount that you're trying to transact on the current rails. And then the lack of interoperability is also a problem because the combination of lack of interoperability between wallets and the cost of transactions forces you as a consumer to commit to loading or preloading a wallet that is captive of one publication or one outlet, and then spend that balance in small increments, which no one wants to do.
It's getting to the point of making money streamable. in a sense.
Yeah, exactly. And we actually have a streaming money demo on our website that involves you having a simple Chrome browser extension that is a non-custodial wallet on top of Lightning. And it shows how you can stream very tiny amounts of money in real time to a creator wallet that could be anywhere in the world. And that's one of the future applications of what could you build if money moved on the internet the same way that every other bit and byte, moves on the internet.
Does that sort of chip away at the thesis or bull case for some of these social Web3 platforms where they, kind of outline a model where they have a token, and that token is what incentivizes folks to participate in the network, engaging with the content? If you could just use Bitcoin for that, does that maybe render the former somewhat
I mean, maybe,
irrelevant?
but the reality is you always need to be concerned with things that are big and important, so that have scale. None of these things have mainstream scale today. And when you think about other applications that are not at scale but are interesting, if you look at what's happening with Nostr, for instance, which is this sort of decentralized Twitter clone, for the lack of a better term. And people basically send zaps, which are small amounts of Satoshis, which are fractions of Bitcoins, in real time on the Lightning Network for posts. And if you look at the number of transactions a day and the engagement you have on the platform, you can really see a flywheel that is very small today, very early days, but you can see the behavior of people really sending and receiving small increments of money in real time on the internet, and what that does to a platform. And I think that's actually really encouraging as a little microcosm sample, but we think it's really promising that you can send or receive very small amounts of money globally, regardless of where you are.
Attention crypto holders. Moving crypto is seamless and secure with PayPal. With support for Bitcoin, ETH, and more, you can buy, sell, hold, send, and check out with crypto at millions of shops online. Not to mention, PayPal now supports the ability to send to and from external wallets and charges you nothing when transferring between PayPal and Venmo crypto wallets. Whether you're exploring the world of Web3 or hodling on for another day, PayPal is the convenient and simple way to convert dollars into crypto. PayPal has your back. They work to protect your financial info and give you confidence every step of your crypto journey. Now's the time to make your crypto move. Get started today at paypal.com/crypto. Terms and conditions apply.
Here's a message from our sponsor, CleanSpark. CleanSpark is a NASDAQ-listed company that mines Bitcoin. Basically, they build and operate data centers with tens of thousands of computers that help secure Bitcoin, making it more reliable and secure for anybody, anywhere to use. These computers require a lot of energy, but that's why CleanSpark predominantly uses low-carbon energy to power their machines. But that's not all. They care about the communities where their data centers are located. They create jobs, donate to schools and community centers, and revitalize aging electricity grids in rural parts of America. They aren't just a Bitcoin miner. They're one of the most efficient and sustainable Bitcoin miners in America. Visit www.cleanspark.com to learn more.
So maybe you can take some time now to walk us through this partnership with Xapo Bank. How does it sort of fit into the broader mission, and what should our listeners expect in the coming months?
Well, Xapo was our first client. They were one of our early beta testers on the early version of the platform that we started exposing to close partners last November. And that's when we realized we actually needed to do a lot more work to make it even simpler to use Lightning, and we abstracted channels and peers and liquidity and all of these things from the next version that we shipped a few weeks ago. And so Xapo was meaningful because it is actually the first bank on the Lightning Network, and it's a European licensed bank that has customers across Europe. and that offers dollar-denominated and Bitcoin-denominated balances to their customers. And they just didn't enable Lightning until they used our stack. And so we were able to help them offer Lightning transactions that have become a lot more relevant, by the way, to all of these exchanges and wallets out there since ordinals and BRC20 tokens became a thing on Bitcoin and clogged up the mempool and took the fees to new highs, right? So since that happened, there's a lot more need for Lightning to enable consumers to move money around in real time at a low cost. And so that's the case with Xapo. Since then, we also onboarded a number of other exchanges and wallets. One of them, which was really meaningful as well, because it opened up Lightning to a whole region that it didn't reach before, is Rain, the largest exchange in the MENA region. And so that's great because you have a big population there needing to send money back home in all kinds of different regions where transaction fees and cross-border transaction fees are quite high. And so having an exchange on the Lightning Network does a few things really well, which is on-ramp from fiat to Bitcoin, and then enables fast global transactions on the Lightning Network on top of Bitcoin. So those things are actually really near and dear our hearts here at Lightspark, because it really helps real people across the world move money in real time at a fraction of the alternative, fraction of the cost of the alternative.
Yeah, that's definitely exciting. And we're seeing, I feel like we're seeing more adoption among different areas of the global south, as it were, as the sort of, you see all these different currencies sort of appreciate to astronomical heights. Walk me through how maybe there's an opportunity here. And this is what your colleague Christian, when we last spoke, his eyes sort of lit up when I talked about the potential for you guys serving a market structure purpose in the wake of Signet and Signature. Or if you held a gun to my head, David, and asked me which ones was which, it would not be a pretty scenario. Silvergate was Sen, Signature was Signet. With
That's
them
right.
Sort of out of the picture, and also just a lot of our plumbing gone now. Can these exchanges, if they're sort of moving money around, or some of these large trading firms, or just large market participants, without sort of these pipes, is it possible to sort of leverage the Lightning Network as this settlement layer or this sort of connective tissue for crypto's broader capital markets? How could that sort of unfold?
So the answer is a resounding yes, but not only for crypto firms, for any firm. So the way that I think about things is basically that a fraction of Bitcoin on top of Lightning is a little bit like a TCP/IP packet for value. So if you have a network that is live 24/7, that enables real-time final net settlement of value between two endpoints, then provided that you can get in and out of Bitcoin really quickly, you should be able to settle and net settle between two counterparties in real time, and no matter where they are, no matter what time of the day it is or day of the week it is. And we think that that's actually a really good application for Lightning on top of our stack, particularly because we can actually guarantee that even larger payments succeed on Lightning, which in the past has been pretty hard to achieve. And so, there are a number of parties that are either implementing Lightning on our stack or are thinking about implementing Lightning on our stack to do exactly that. So in the crypto world, but also outside of the crypto world.
Yeah, fair enough. I'm interested sort of in your journey as an entrepreneur. I feel like part of the firm's original stealthiness, let's call it, might be tied to the Libra story, which got so much press. I feel like you just wanted to get your head down and build something, find a sort of product that worked and maybe worked with sort of beta users. What was it like, sort of being an entrepreneur in such a very public way, getting grilled by regulators? I was there. I remember that day in D.C. when you testified before Congress. It was so hot. I sweat through my entire suit. It was one of the hottest days I've ever experienced in Washington. But I'm
sure. And you were not in the hot seat.
And I was not in the hot seat. It was you, and you did a great job. I think I would have been much more frustrated than you. Did that experience, and then sort of like working so hard, and then having it sort of like, basically shut down, for lack of a better word.
Yeah.
Walk us through that experience and like what it maybe taught you as just as an entrepreneur.
Well, look,
because most of the time when companies fail, it's because people don't like their product. You didn't even get a chance to get to that point.
That's right. I think people would have actually quite liked that product. But look, it was actually really worth a shot. And if I could be brought back to that moment and do it all over again, I would do it all over again. And of course, we have lots of learnings, and I'm actually, somewhat doing it, in a completely different way now. But the key thing was that it was time, and I think a lot of us had this feeling that it was really time for a real-time payment protocol for the internet. This notion that back in the day, there was this HTTP 402 protocol that was actually determined as a request payments protocol on the internet and was never implemented, felt like it was about time, right? And the fact that we were still, and we are still now in 2023, moving the vast majority of value around the world on infrastructure that was built in the late 60s and 70s feels inadequate and infuriating, frankly. And so it was worth a shot, and the approach was basically that Facebook reached 3.5 billion people every month. And so as such, if we built something that was really good, then maybe because of the distribution and the fact that we would adopt it, then other companies would adopt this thing as the standard payment protocol for payments. And that part actually worked out quite well. We had a number of 28 companies join the Libra Association. And the problem was that we tried to keep this thing under wraps for as long as possible. But then there were rumors left and right, and all of the rumors were actually a lot worse than what we were actually doing. And so at some point we were like, okay, we just need to share our white paper, which is just the general idea of what we're trying to do here, and launch our testnet.
I know they call it one of the original names, or one of the rumored names, was WorldCoin, I think it was.
So there's actually a funny story that I'm not sure I've shared before on this. This name was actually coined by Mark Carney, who was the governor of the Bank of England at the time. And he was trying to describe what we were trying to do. He was actually a proponent of this, one of the few large country central bankers who really believed in the value of this. And he was like, oh, this is, and that was before we named it. And he was like, oh, you should call this thing WorldCoin. and for some reason, then, he or some other people are in his sphere of influence probably shared that brand or that name with someone.
They're calling it WorldCoin.
Yeah, and then it became a whole meme, and we felt like it was time for us to talk about it. And so, Facebook is kind of interesting also, or Meta now, but in a way that it tries to build product in the open. And that's part of the culture of the company, to be not as secretive as other tech companies when it builds products. And we wanted to do it in the open. We wanted to get feedback, and boy, did we get feedback. We got a lot of feedback really early on. And I think, I feel like when you're building these types of products and services, if you have the opportunity to actually go build something of value that solves real world problems, and go demonstrate that it solves real world problems rather than talk about it, then it's always better. It's just that there was just so much exposure, so much swirl and rumors that we had to just talk about it and start getting feedback, and that's what we did. And it just turns out it was the wrong place to do this from. And the reality is that with years between the time we started the project and the moment we actually announced it, Facebook's reputation was under a lot of fire at the time. I think it's much better now, actually, but it was under a lot of scrutiny, a lot of fire, lots of distrust, and it made it really hard for us to breach into financial services and payments, basically.
At what point did it become apparent that it was an untenable? There was no path forward, rather.
Well, the summer of 21 was actually really the end of the road, because there was the Fed and Treasury basically decided that they weren't comfortable. That was kind of the way to, because there was no legal basis to actually say you can't do this, right? So we were fully regulated as a wallet. The network itself was operating within the bounds of the regulatory frameworks in the U.S. So there was no regulatory reason for it, but it was actually the we're not comfortable. And when you're saying we're not comfortable as a prudential regulator of banks to the banks that are providing the on and off ramp to a network, then that's it. And we tried our best really to try to address all of the legitimate concerns. There were legitimate concerns and not so legitimate concerns, but the legitimate concerns, I feel really comfortable that we addressed every last one of them. And it was just a political setup that just wasn't conducive to us moving forward. And so in June, I think late June of 21, it became really clear that this was not going to ship. And so, it was time.
I think a lot of people listening are probably thinking, who's to say, or what's not to say, that something like that couldn't happen to any company building in crypto. Let's say Bitcoin scales to 3.5 billion people. Is it a potential that maybe not Treasury, but some organization, some alphabet soup agency might become uncomfortable with, I don't know, the block or Lightspark, probably more so Lightspark than
I mean, look, I think honestly, I feel like building on top of open protocols is actually a really good thing, generally speaking, because I mean it's not like you have a central organization that controls the protocol, and as such, single-handedly shutting down companies building on top of a network is not going to end the network. So I think that's a good thing to build on top, like the internet, right? It's like stopping the internet today would be hard. But I think it's beyond that. I think the real question is actually, if you have real decentralization and you have a number of companies that are building on top of a protocol that solves real world problems, reduces costs of payments and transactions for people all around the world, enables them to send money around the world and get paid much faster. I mean, that's the thing that really was hard for me. It was not failing at launching Libra or Diem, if you prefer to call it that, but it was the fact that we talked to so many people around the world and even in the U.S. that really badly needed this. And in the U.S., I remember talking to a number of families, because you have almost 10 million households in the U.S. that are, or at the time, that were unbanked. And I was like, this is really interesting, because are these people eligible for bank accounts? And at the time we talked to them and they were totally eligible for bank accounts, but they just didn't want the unexpected fees to be debited from their bank accounts at the time they might need their money the most. And so they preferred actually cashing checks and paying 10% to a payday lending location to actually get their cash out and to live in a cash economy because of that. And then a lot of these people actually had to send money back home. So they paid 10% to cash a check from their legal hard-earned labor. And then they took that money, that cash, to a cash-in location to send money across the world that would then, cost them another 10, 15, 20%, arrive there 3 days later. And then on the other side of the world, people would get mugged when they get the cash out, because cash out locations are kind of popular locations for criminals to go extort people and take their money. So you think about this, and we're in 2023. Nothing has changed, from that standpoint. And if you could send money on the internet the same way you send an email, and if you could have sound digital value on top of that network, then all of these problems are solved. So that's what gets us going, right? It's like, trying to solve that underlying infrastructure problem, modernize our rails so that everyone can actually benefit from digital payments the way it should actually work in the world today.
So what should we expect? What are you most excited about over the next 6 months that will manifest that vision into something tangible?
Well, I think, the first thing is, for us right now, it's really infrastructure work. It's really building the capabilities that will enable any enterprise out there to access a real-time, super low-cost settlement network for the internet that's interoperable, that's open, that any developer can build on. And I think, what we did is we made it really usable, basically. And I think that you're going to see more adoption. You need more exchanges to be on the network so they can actually move not only Bitcoin, but be good on and off ramps for that network, the Lightning Network. You need wallets to be on the network. So that's what we're focused on right now, is really enabling both custodial and non-custodial endpoints to send and receive payments on the Lightning Network in a reliable way. And in a way that doesn't require a huge operational burden. So, that's the focus right now. And then what we aim to go to from here is actually enable transactions in all kinds of different currencies. You just looking at the Lightning Network as a settlement network, and Bitcoin as a settlement asset that you can actually convert into and out of really easily, because if your transaction takes less than a second to clear, the volatility of that settlement asset on the network for just that split second is not that costly to manage.
Mm-hmm. Yeah. So expanding the sort of currencies that you're sort of dealing with is one priority. Yeah,
and we don't have to be the ones actually providing that service. There are plenty of players out there, exchanges, OTC players, market makers that can actually perform that function in various different forms in their own vertical industries. That's the beauty of an open network. I that's one of the things that actually feels really great, which is to build within a community of other builders that are building all kinds of different things that are basically an accelerant to each other. Mm-hmm. I was at the Bitcoin Miami conference a few weeks ago, and it was really great to see how people are ideologically motivated. Not everyone for the right reasons, but a good chunk of the people there, builders, because they want to offer a better alternative and are building different types of solutions, like podcasting, streaming money to podcasters in one case, or building a digital wallet for a specific region, or building a new phone with a wallet for another region that would be on Lightning. It's like really great to be building amongst other builders that are basically building things that are accelerating each other. It's a great feeling.
People are building in the bear. They're building in the bear.
Yep, they are. They definitely are.
A few rapid fires. I know I'm taking up probably more time than I should have.
Oh, good.
But we've got a few questions here.
Go for it.
What is the most underrated crypto project or trend that people aren't paying enough attention to?
I mean, underrated is probably Lightspark. I'll say but it's good. I like it this way. It's good. I like underrated and
Why do
then
you think it's
surprise
underrated?
on the upside. It's good. No,
Just
I mean,
in
look,
terms
I
of-
feel like an open
It's
real-time
infrastructure, right? I mean, infrastructure is never going to be as sexy as something more consumer facing, I guess.
No, that's true. I think, when you think about AI and what's going on there, it's also infrastructure. But I think OpenAI did a pretty good job at
Yeah, but I
bringing
can't
the whole
ask.
thing
I can't,
home.
I can't message David Marcus and have him like send me 5, recipes based off what's in my fridge.
Yeah, no, that's true. That is true. But yeah, I think the general idea of what is going to be possible with an open, almost free payment network on the internet is definitely underrated, and I think in the next decade the infrastructure moving value around the world is going to evolve in a way that is going to be very meaningful to many people.
Do you think it's just because maybe this might be a skeptical question or jaded question, but for some people, I feel like it's maybe just taking so long. Like Bitcoin's narrative started as payments 10 years ago, then store of value, and the sort of payments narrative has kind of ebbed and flowed, and people haven't really seen it. They're not, again, what's that timeless mantra? They still can't buy their cup of coffee with sats. So
yeah. Yeah, and by the way, I don't think that's a very compelling use case either, because people are fine paying for coffee with their cards, and they don't see a problem with that. But and I think this is funny because it's always the example that everyone uses, but it's the least likely to be disrupted by this. So I think the key here is that when you talk to people in the Bitcoin community, they have this wonderful thing, which is this certainty that it's going to play a bigger and bigger role in the world, and we just have to be very patient, and it's going to happen. And so far, they've been right, mostly. But I agree with that, but I feel like you also need to do whatever you can and put as much energy and builders' energy and mentality towards actually accelerating that time frame for everyone. And that's what we really believe in at Lightspark. It's actually this idea that if you bring together the best engineering team in the world and the best people from all disciplines and design, and even though it's an enterprise product, we pride ourselves in the quality of our design and product experience, and economists, and bring together the best people in the world to actually solve the world's biggest problems when it comes to moving value around the internet, and you put a lot of energy into it, then you can probably bend time a little bit and accelerate the time frame for these things to happen, rather than just hoping that it'll happen. And I think that's kind of an interesting thing within the Bitcoin community that is changing, because now that you don't have all of these tokens that you can issue and make a quick buck out of these, people are coming back to building on Bitcoin, which is really exciting.
I know. I think I have 2 Bitcoin episodes this week, which is pretty.
Well, there you go.
You and Sailor. So
how many Bitcoin episodes did you have last year?
I think that we just have these gaps where, at least for our show, where I sit down with the producer and I go, we haven't talked about Bitcoin in like 2 months, so let's go find somebody and bring them on.
There's just more happening. I think there's more happening on Bitcoin in terms of development energy in the last 12 months than in the last X number of years combined. It's really pretty amazing to see.
Yeah, that's what I'm hearing as well. Okay, one more. If you could do one thing 2 more, but the second one's easy. If you could do one thing to improve the crypto space, what would it be?
I think I would just remove the fanatics. It's I feel like you need a little bit more. I respect the almost religious beliefs that people have in these things, But I think that at times it's actually very counterproductive because you need to build things that are compatible with the real world. And for that, you need to not only understand how the real world functions, but also build it in such a way that it will work with the real world. And I think that being very extreme in views, in narrative, rather than staying factual and grounded and focusing on the work, is actually just not good for the industry. I think that you have more serious players now. If you look at what Coinbase is doing and what Brian Armstrong is doing in terms of just trying to explain things clearly and fighting the good fight to be properly regulated in the U.S. and driving clarity, I think that's good. And when you hear people who basically say that all that exists other than fill in the blank project that I'm working on is needs to burn in the fires of hell, that actually just doesn't it's not great.
I feel like most of those people are like Anons in their basement. But there are some that are not.
There are some very visible ones too.
Yeah, there are. Well, hey, thanks so much for taking the time for joining the show.
My pleasure. Thanks for having me. Good to see you.
My pleasure as well. And again, we've been joined today by David Marcus, CEO and co-founder of Lightspark. David, thanks so much for joining the program.
Thank you.
The Scoop will be back for you again with another great guest. Have a great day.